Tax brackets are the divisions at which tax rates change in a progressive tax system. Essentially, they are the cutoff values for taxable income. Euro income past a certain point will be taxed at a higher rate. Example, imagine that there are three tax brackets, 10%, 20%, and 30%. The 10% rate applies to income from $1 to $10,000. The 20% rate applies to income from $10,001 to $20,000. And the 30% rate applies to all income above $20,000. Under this system, someone earning $10,000 would be taxed at a rate of 10%, paying a total of $1,000. Someone earning $5,000 would pay $500, and so on. Meanwhile, someone earning $25,000 would face a more complicated calculation. The rate on the first $10,000 would be 10%. The rate from $10,001 to $20,000 would be 20%. And the rate above that would be 30%. Thus, they would pay $1,000 for the first $10,000 of income, $2,000 for the second $10,000 of income, and $1,500 for the last $5,000 of income. In total, they would pay $4,500, or an 18% average tax rate. In practice, the computation is simplified by using point-to-euro slope form or slope-euro-intercept form of the linear equation for the tax on a specific bracket, either as tax on the bottom amount of the bracket plus the tax on the marginal amount within the bracket, or the tax on the entire amount, minus the amount that this overstates tax on the bottom end of the bracket. See progressive tax computation for details. Tax brackets in Australia. Individual income tax rates financial years 2010-11, 2011-12. The above rates do not include the Medicare levy of 1.5%. Financial year 2012-13. The above rates do not include the Medicare levy of 1.5%. Tax brackets in Canada. Canada's federal government has the following tax brackets for the 2012 tax year. Note that the basic personal amount of $15,527 effectively means that income up to this amount is not subject to tax, although it is included in the calculation of taxable income. Each province except Quebec adds their own tax on top of the federal tax. Quebec has a completely separate income tax. Provincial/territorial tax rates for 2012. Tax brackets in India. Income tax slabs applicable for financial year 2015-16 is summarized below. Tax brackets in Malta. Malta has the following tax brackets for income received during 2012, single rates, married rates. Tax brackets in the Netherlands. Tax brackets in New Zealand. New Zealand has the following income tax brackets. All values in New Zealand dollars, with the ACC earners levy not included. 10.5% up to $14,000, 17.5% from $14,001 to $48,000, 30% $48,001 to $70,000, 33% over $70,000, 45% when the employee does not complete a declaration form. ACC earners levy for the 2010 tax year is 2.0%, an increase from 1.7% in the 2008 tax year. Tax brackets in Singapore. 2007 and 2008 there will be a personal tax rebate of 20% granted for 2008, up to a maximum of $2,000. 2013 All figures are in Singapore dollars. Tax brackets in South Africa. The Minister of Finance announced new tax rates for the 2012 Euro 2013 tax year. They are as follows. Tax brackets for the 2012 year of assessment tax brackets for the 2013 year of assessment Tax brackets in Switzerland. Personal income tax is progressive in nature. The total rate does not usually exceed 40%. The Swiss Federal Tax Administration website, too, provides a broad outline of the Swiss tax system, and full details and tax tables are available in PDF documents. The complexity of the system is partly because the Confederation, the 26 cantons that make up the Federation, and about 900 communes, municipalities levy their own taxes based on the federal constitution and 26 cantonal constitutions. Tax brackets in Taiwan. Income tax rates financial year 2013. Tax brackets in the United Kingdom. Tax brackets in the United States. 2013 tax brackets under current law as of January 1, 2013, the tax brackets have been updated. In 2013, Congress allowed the tax cut that was enacted during the Bush administration to expire for taxpayers making over $400K/$450K in taxable income. Tax brackets for 2013 are as follows. In the United States, the dollar amounts of the federal income tax standard deduction and personal exemptions for the taxpayer and dependents are adjusted annually to account for inflation. This results in yearly changes to the personal income tax brackets even when the federal income tax rates remain unchanged. 2012 tax brackets for 2011, the standard deduction is $5,800 for single individuals and married individuals filing separately, $8,500 for heads of household, and $11,600 for married couples filing a joint return. The dollar amount of each personal and dependency exemption is $3,700. Nearly 2 out of 3 taxpayers take the standard deduction, rather than itemizing deductions, such as mortgage interest, charitable contributions and state and local taxes. The federal income tax brackets for 2011 are as follows. 2011 tax brackets 2 higher tax brackets were added in 1993, and then taxes in all brackets were lowered in 2001 through 2003 as follows. Internal Revenue Code terminology gross salary is the amount your employer pays you, plus your income tax liability. Although the tax itself is included in this figure, it is typically the one used when discussing one's pay. For example, John gets paid $50 per hour as an electrical engineer. His annual gross salary is $50 per hour x 2,000 hours year equals $100,000 per year. Of this, some is paid to John, and the rest to taxes. W-2 wages are the wages that appear on the employer unregistered trademark W-2 issued by his employer each year in January. A copy of the W-2 is sent to the Internal Revenue Service. It is the gross salary less any contributions to pre-tax plans. The W-2 form also shows the amount withheld by the employer for federal income tax. W-2 wages equals gross salary less. Total income is the sum of all taxable income, including the W-2 wages. Almost all income is taxable. There are a few exemptions for individuals such as non-taxable interest on government bonds, a portion of the Social Security income, etc. Adjusted gross income is total income less some specific allowed deductions, such as alimony paid, permitted moving expenses, self-employed retirement program, student loan interest, etc. Itemized deductions are other specific deductions such as mortgage interest on a home, state income taxes or sales taxes, local property taxes, charitable contributions, state income tax withheld, etc. Standard deduction is a sort of minimum itemized deduction. If you add up all your itemized deductions and it is less than the standard deduction, you take the standard deduction. In 2007 this was $5,350 for those filing individually and $10,700 for married filing jointly. Personal exemption is a tax exemption in which the taxpayer can deduct an amount from their gross income for each dependent they can claim. It was $3,400 in 2007. Sample tax calculation given the complexity of the United States Income Tax Code, individuals often find it necessary to consult a tax accountant or professional tax preparer. For example, John, a married 44-year-old who has 2 children, earned a gross salary of $100,000 in 2007. He contributes the maximum $15,500 per year to his employer unregistered trademark S401k retirement plan, pays $1,800 per year for his employer unregistered trademark S family health plan, and $500 per year to his employer unregistered trademark S Fleeks Fund medical expense plan. All of the plans are allowed pre-tax contributions. Gross pay equals $100,000. W-2 wages equals $100,000 euro $15,500 euro $1,800 euro $500 equals $82,200. Johnny unregistered trademark S and his affiliate unregistered trademark S other income is $12,000 from Johnny unregistered trademark S affiliate unregistered trademark S wages, $200 interest from a bank account, and a $150 state tax refund. Total income equals $82,200 plus $12,000 plus $200 plus $150 equals $94,550. Johnny unregistered trademark S employer reassigned John to a new office and his moving expenses were $8,000, of which $2,000 was not reimbursed by his employer. Adjusted gross income equals $94,550 euro $2,000 equals $92,550. Johnny unregistered trademark S itemized deductions were $22,300. John had 4 personal exemptions himself, his wife and 2 children. His total personal exemptions were 4x $3,400 equals $13,600. Taxable income equals $92,550 euro $22,300 euro $13,600 equals $56,650. The tax on the taxable income is found in a tax table if the taxable income is less than $100,000 and is computed if over $100,000. Both will be used. The tax tables can be found in the 2007 1040 instructions. The tax tables list income in $50 increments for all categories of taxpayers: single, married filing jointly, married filing separately, and head of household. For the taxable income range of at least $56,650 but less than $56,700, the tax is $7,718 for a taxpayer who is married filing jointly. The 2007 tax rate schedule for married filing jointly is $1,445,100 plus 60%, the tax is 10% on the first $15,650 equals $1,565, plus 15% of the amount over $15,650 up to $56,650 equals $41,000 x 15% equals $6,150, total equals $7,715. The difference is because of the use of the tax tables in the first determination, and these tables are in $50 increments. Johnny unregistered trademark S taxable income was at the bottom of the increment. If his taxable income had been $56,675 in the middle of the increment, then the calculated amount would be $7,718.75. In addition to the federal income tax, John will probably pay state income tax, Social Security tax, and Medicare tax. The Social Security tax in 2007 for John is 6.2% on the first $97,500 of earned income, or a maximum of $6,045. There are no exclusions from earned income for Social Security, so John will pay the maximum of $6,045. His wife will pay $12,000 x 6.2% equals $744. Medicare is 1.45% on all earned income with no maximum. John and his wife will pay $112,000 x 1.45% equals $1,624 for Medicare in 2007. Most states also levy income tax, exceptions being Alaska, Florida, Nevada, South Dakota, Texas, Washington, New Hampshire, Tennessee and Wyoming. See also, income tax threshold. References. Individual income tax rates. Rates and calculators. ATO. July 5, 2010. Retrieved July 8, 2011. Individual income tax rates. Rates and calculators. ATO. July 1, 2012. Retrieved July 1, 2012. C-Line 1 Basic Personal Amount, Canadian Income Tax Rates for Individuals, Current and Previous Years. CRA-ARC GC CAR. January 14, 2014. Retrieved April 15, 2014. Canadian Income Tax Rates for Individuals, Current and Previous Years. CRA-ARC GC CAR. January 14, 2014. Retrieved April 15, 2014. Income Tax Rates for Individuals. GOVTNZ. Retrieved April 15, 2014. http www.treasury.gov's National %20 Budget Review Annexure %20 CPDF, E3D3AE, OE to the first EOEA per mil. Tax Administration, Ministry of Finance, ROC. November 16, 2012. Retrieved February 20, 2013. AB Tax Brackets Income Tax Brackets 2013. Bankrate.com. Retrieved April 15, 2014. Tax Brackets and IRS Tax Rates Resource Center. MyTaxBrackets.com. Retrieved April 15, 2014. In 2011, many tax benefits increase slightly due to inflation adjustments. Internal Revenue Service, United States Department of the Treasury. 2008 inflation adjustments widen tax brackets, http www.ERS.gov PDF I-1040 TT PDF, 2007 Federal Tax Rates Schedule. IRS. Archived from the original on September 11, 2007. Retrieved September 17, 2007. 1. http Connect Indiacom Income Tax Slab Rate / External links, more about Canada Personal Income Tax Rates, Brackets and Surtaxes for 2011.